money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to teach and educate. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Interest rates and oil prices shot up today while the dollar jumped versus the euro, causing the market to get crushed. Wait, no, hold it. No, that actually was good for the market. Dow gained 126 points. S&P climbed 0.46%. Nasdaq advanced 0.04%. How did these totally terrible things suddenly become good for stocks? Because this market is trying somehow, flailing, find a base, trying to find a footing where it doesn't go down every day, and where segments that have been hard hit can attempt to rally. And it's finding its footing, listen to me, in all the wrong or most ignorant places. For example, last week we saw the banks just get crushed as the Fed kept interest rates low. Banks need higher rates to make more money off your deposits. So the stocks got dumped when the Fed decided to hold steady. It doesn't matter at all to people that the banks are actually doing quite well here in the U.S., that it's got more robust lending than pretty much anywhere else on earth. No, people don't care about that. We learned last week when John Stump, the CEO of Wells Fargo, came on the show, he made it very clear that business is excellent. People didn't care about that either. The stock got hammered. However, big money managers, what do they want? They want risk-free growth. Lending's a risky business, even if you're Wells Fargo, which is an amazingly circumspect lender, unwilling to make loans that are judged to be too risky for you or the bank. Nope, the stock market prefers to see business that's foolproof when the banks take your deposits and invest them in virtually risk-free treasuries at a rate that's been bumped by the Federal Reserve. So when interest rates went up today, hallelujah, the bank stocks went up right along with them. Now, that's not necessarily silly. It's not completely ridiculous. The financials represent almost a fifth of the market, so when they rally, of course, they can take the market up too. But even more important to the rally in stocks and the rise in interest rates was the jump in energy prices. Energy. Now, we tend to forget how many energy companies did come public during the boom. They've become totally problematic. Many are overstretched. Saudi simply will not let up their attempts to flood the world with cheap oil. So they've been keeping a lid on prices. But occasionally, crude can't be kept down because of stronger demand from both Europe and the United States. So when you see a lift in oil, like the $1.55 increase you saw in crude today, you're also getting a lift in the vast complex that takes in so many different kinds of stocks, big energy companies, independents, drillers, oil service companies. These stocks litter so many portfolios that anything which allows them to rally gives you some breathing room. Now, of course, here's the nutty part of all this. When interest rates rise, it is per se bad news for the U.S. economy. So take a company like Lennar, the second largest home builder in the country. Lennar reported a very good quarter, but said it was growth was constrained by labor and land, and it had a higher inventory of starter homes than I would have liked to see. Plus, this morning, we got some very weak existing home sale numbers. An increase in rates is unquestionably negative for the home builder. So believe me, whether rates are taken up by the Fed or by the market itself, as the case today, the industry suffers. Higher mortgage rates, fewer homes sold. You get it. Given that housing makes up roughly 10% of the economy, but is also a huge spur to retail and consumption, about two-thirds of our economy, a healthy housing market is imperative for the U.S. economic growth. So don't be deceived by the positive action in the banks. Higher rates will ultimately hurt the stock market. It just didn't happen today. Then there's energy. Again, a total conundrum. The stock market has taken no solace whatsoever in the fact that gasoline's fallen below $2 in many states. The airline stocks have not benefited at all from lower jet fuel. It's almost as if all this good news is happening in a vacuum. And the supposed bad news of today's oil rally is good enough to propel many stocks higher beyond energy. What stocks were the strongest today? Even stronger than the energy group. In fact, much stronger than the energy group, which in several instances actually went down. Retailers. That's right. The retailers rallied hard when the only news for them was negative. Higher rates, higher gasoline prices. The restaurants, they acted great. Buffalo Wild Wings, all-time high. The other group that rallied hard off the higher rates and higher oil, not to forget a higher dollar, the consumer packaged goods, CPG. Stocks of all things. I mean, make no sense at all. These stocks are huge beneficiaries of lower energy costs and lower interest rates and a lower dollar. That's right, lower. The consumer packaged goods companies are colossal consumers of energy, both to make their packaging and for transportation to get the stuff to the stores. Interest rates matter because many of these stocks are similar to bonds, meaning they're securities that pay good yields, and those yields lose their allure when interest rates go higher. plus a stronger dollar, the worst thing for these companies. Worse than high rates, worse than higher energy costs. These companies have huge overseas earnings, and they're always fighting for their lives against European competitors that sell similar products. They lose always. Oh, and let's throw in something even crazier. Today, the drug stocks started up. They were looking real good. Then they were hammered mercilessly by a tweet from presidential candidate Hillary Clinton, who tweeted that price gouging by drug companies has to be stopped. She will lay out a plan to stop it. The gouging may have been done by a very small, microscopic company, but the trashing resonated through all of pharma, particularly those orphan drug company stocks. These are the drugs that cost a fortune, but typically save lives and save money for the system, as the maintenance of these sick individuals often costs a lot more than the drugs themselves. The destruction in the biotech complex did take my breath away. It repealed months of advances after a severe decline. Those of us who remember when Hillary's husband talked about pharma price gouging back when he was a candidate for president totally understand why these stocks, including the stock of Allergan, which we'll hear from later, went into free fall. Why bother to point out all of these contradictions? Why not just say, hey, it's all good news? I can't. It's very simple. Just as the decline on Friday, I told you, proved to be unsustainably moronic because it was based on absolutely nothing but fear of fear itself. Today's advance will most likely prove to be unsustainable because it's based on entirely counterintuitive, if not just plain wrong, reasoning. Higher rates, higher energy, higher dollar are all bad. The other day, a follower retweeted something I said earlier in the year, that we must never forget the power of the market to be incredibly stupid on a given day. Today was a stupid day. Stupid days can't be dismissed, though, because a market that makes no sense is a market that loses adherence as it goes along. I want to keep driving home this point. Markets are about supply and demand of stock. We have a seemingly endless amount of stock, more coming online, every deal, every lockup expiration, like the gigantic one that crushed the shares of Alibaba today. Normally, it wouldn't matter because there would be enough money coming in over the transom to handle lockup expirations, secondaries, big sellers. Some of that money would come from takeovers, which are now beginning to dry up. Some of it would come from cash that's been stalled on the sidelines, waiting for a decline like the one we've had of late. Instead, though, the irrationality of this market is driving people away. It permeates everything. It's making people uncertain. A market that makes no sense to guys like me is a market that I want to sell, not buy. And that's exactly how I feel about this one. Sure, it's terrific that we can rally on no real good news, but that's just the flip side of what the market did last week when we sold off on good news, the good news that the Fed was staying its hand. As long as stocks do not act rationally, as long as the inputs produce the wrong outputs, I'm going to urge you to have one foot out the door at all times. So here's the bottom line. It's just unsafe to see stocks move the wrong way, like today's rally on bad news, because one day it's going to move the wrong way and not recover as it did from today from Friday's pasting. Instead, it's going to go down and stay down. And it's my job to point out how worrisome this market is on a day-to-day basis, even when it's up. Dave in Illinois. Dave.
Dr. Kramer, great work, by the way, on your interviews last week at One Market Street.
Oh, thank you. We're very proud of the team who put together an unbelievable group of guests.
Jim, ever since Celgene's mid-year announcement partnering with Juno Therapeutics for T-cell cancer therapy instead of with Bluebird, the stock has declined roughly 20%. Their pipeline includes lentiglobin that treats patients with sickle cell anemia and hemoglobin deficiency. Phase 2 and Phase 3 trial results might be revealed at the meeting of the American Society of Hematology in Chicago, December 5th through 8th. Jim, I'll be looking for an attractive entry point into this stock. What are your thoughts on Bluebird?
Boy, I'm so glad. First of all, Dave, thank you for the kind words. I am so glad you brought this up. Why? Because this group's been slaughtered, and a lot of people have really turned on it. And I look at Bluebird Bio, and I say exactly like you did, which is that at one point, Celgene's going to do what it did to Receptos. It could just buy the rest, but not at this point. And I think there's going to be pain for those who buy it. But if you take a longer-term view, there is no doubt in my mind that Bluebird is worth more than what it's currently selling for. How about Sally in Ohio? Please, Sally.
Booyah, booyah, Mr. Kramer.
I like that.
From Columbus, Ohio, home of the famous Ohio State Buckeyes.
Well, number one, looking good.
Looking good, you're right. I have been a long-term loyal investor with a company called Atmel for several years, and I would like to know if the stock is overvalued at its current PE. Is it time to buy more, or should I sell my 1,400 share position at this time.
Well, Sally, they got to take over a bit over the weekend. I thought I wrote a piece for Real Money, the paid side of the street, saying this was a great deal. It is worth $10.47, but the acquirer, a German company, got completely hammered on it. That made no sense to me. I think this is a great combination. I'm actually breaking my rules here and telling you to stay long Atmel. I think that the stock is undervalued after that bid. Let's go to Arlene in my home state of New Jersey. Arlene.
Yes. Hi, Jim. I love your show.
Thank you.
My question is the possible merger between Time Warner Cable and Charter. I own Time Warner Cable, and my shares have tripled in value. Do I sell or go with the merger?
No, I would hold on. I think that this is fine. The cash flow is very stable. A lot of good things can happen here. I would not sell the stock. I think you can get higher prices. We are in a bear market for a lot of stocks, but that company, I think, can go higher over time. All right, when the heck did bad news become good news for stocks? This market's trying to find some base, but you know what? I think it's an uncertain base, if not a base on quicksand. That's why you got to keep one foot out the door at all times. On Mad tonight, more on that biotech sell-off. We have the CEO of Allergan put everything in perspective. The company's been making some big moves, but should you be worried about today's slide? Then how do you solve a problem like La Quinta? Disaster struck the company last week. Stock took a nosedive. I'm going to tell you what to do. And St. Louis Fed President James Bullard and I had some words this morning. As the saying goes, sticks and stones may break my bones, but Bullard will never hurt me. I've crafted a response to the Fed president. Why don't you stick with Kramer?